We kick off with Finweek's cover story, a bold look at how ArcelorMittal SA is managing a rather dismal set of industry and company-specific circumstances. In particular, journalist David McKay looks at the woman behind the business. Does CEO Nku Nyembezi-Heita have the mettle for this market? My guest for the story, Janse Van Vuuren. He's editor of miningmx.com, and Garth Theunissen, markets and companies editor at Finweek. Welcome, gentlemen. Really good to have you here.
Thanks, Erika.
If I could start with you, Mark, as the editor of Finweek, why have you chosen this as your cover story in a rather, I must say, Margaret Thatcher-like picture, and you've chosen the caption?
Yeah, we thought it was a very interesting one. Obviously, South Africa's got quite a big influence on infrastructure and development, and obviously ArcelorMittal has got a big role to play in that particular sector. But it's an interesting thing in terms of it's a politically sensitive company. There's been a lot around session iron ore. The share price has been absolutely walloped in the last couple of years. I think we saw just before we left 70% down in the last 3 years. It's a big number. There's competition commission issues. There's an issue about pricing. There's a lot happening in this business at the moment, and strategically it's a very important asset in South Africa. Yeah. Investors are very interested because there's obviously, you've seen an important business get wiped out to such a big extent. You think, is this buying opportunity? We want to understand what was happening with this business, who was driving it, and essentially what are the personalities at play in this?
Yes. And Andre, this is the last day of Women's Month. Is there a reason then why you also looked at a female head of an important business?
You'll have to ask the editor of Finweek that, but what I can tell you is that she's definitely in a bit of a difficult spot. I know if there's a bit of a toss-up at who's got the most difficult CEO job in South Africa, I think you have to look at either her or some of the platinum guys. But I think sort of like the platinum guys are still sort of like in a club. I think Nku finds herself in a very lonely corner.
I think maybe just building on Andre's point there, I think you mentioned Women's Month, and I'm probably getting into trouble for this, but I mean the CEOs that are under a lot of pressure are, there's the Merwe from ABSA, there's Cynthia Carroll at Anglo, and now you've got ArcelorMittal, and I think it's very interesting. It just falls at a very interesting time, and I think to exactly Andre's point though is it's a lonely position to be in. Banking's very much an old boys club, mining, and there is the old boys club there as well, and you wonder, there's interesting personalities at play here.
I just wonder if we can sort of lay the blame at her doorstep, because she sort of inherited the company or came into the position around about the time of the 2008 financial crisis. You've had electricity prices going up, commodity prices first got hit by the crisis, then they recovered. At the moment, iron ore is taking a big hit. People are talking about the $120 floor that iron ore has always had disappearing. And then there's all the legal wrangles that she's engaged in, and yeah, I mean, I just wonder if it's her management or if it's just the circumstances she's inherited.
And perhaps a related point, she's been there 4.5 years, and the point you've not touched on is what autonomy does she have? If you think of the parent company, are they pulling the strings?
Well, there's definitely the feeling that she's just taking orders from Luxembourg, and that a lot of decisions that was making here that has sort of like raised eyebrows, sort of like decisions that's taken out of her hands. I'm sort of like thinking along the lines of the initial bid for Imperial Crown Trading when they lost the stake in Sishen at first. So yeah, there's definitely that feeling that a lot of decisions she has to communicate here are actually, that she's just being told to act this way, yes. And that puts her in a difficult corner.
She kind of hints at that in the story, where she says she's just a cog in the machine, and a CEO is nothing special. So I wonder, maybe there's a message in that as well.
What I'm thinking, and what I couldn't help feeling back at the time when the whole Sishen iron ore story broke up, is yes, you describe all the tough industry circumstances, but then there also, it just seems like odd decisions and odd pronouncements and odd reactions to the situation. Perhaps naive, I'm not sure.
Yeah, and I think that there's a set of circumstances that you inherit a business that operates on a certain model. I'm sure Andre can unpack the model a bit more, but pricing has changed. The economics of that particular business have changed quite significantly. And suddenly there's a way that the business is run very profitably, and the shareholders have all given it the thumbs up. Suddenly she's inherited a business that has fundamentally changed the way it operates. Its suppliers are suddenly in dispute. They're fighting with government. There's this whole issue about export pricing parity. There's a lot of issues at play that weren't there in the previous regime, and suddenly this is a real test of management at the moment.
And let's talk about the economics behind this business in this industry, Andre.
Well, I think if you first have to look macro, it's definitely a difficult time to be in the steel supply business. I think David remarks in the article that in 2005 globally the big players were operating at a 45% margin. These days it's closer to 10%.
Those were the heady days.
Yes, no, you know, so with 10% there's not a lot of margin for error there. You know, if you hit some sort of speed bump, then you're under.
Let's just talk about what has compressed those margins. Locally, it would be the electricity price, the costs of the material inputs, etc., labour.
Well, the two big input costs are electricity and then also iron ore. Now, if you think about the whole scission dispute goes about the cost of that iron ore. In the past, they used to get it at cost plus 3%. Now, even in recent times, Kumba, from where they get the iron ore, produces iron ore at $27 a ton. That's their cash costs. So if you take that as a basis, and you take just even in this interim stage where they are now, where they get iron ore at about $63 a ton, you know, that's a significant step up from what it used to be. So that's your cost side, and then on your pricing side, you just sit with this industry where there's a glut just of supply worldwide. There's a slowdown in economic growth. Europe has no appetite for steel anymore, so there's just not margin for prices to increase. There's rather pressure on prices, and as a subsequent margin is just not there anymore.
So it's a nasty history, and you talk about its volatile earnings history, and you quote Adrian Saville, for instance, who believes they've lost their way. So that sounds personal. Again, you've got the industry specifics and the way that they're managing it.
Yeah, and I think there's also another dynamic, and I guess drawing the analogy with the Absa example again, you know, you've got a foreign shareholder that is does have a stake in this. Are they looking to try and suck out what was a very profitable business? And you know, and then you look forward and you say, oh, so Transnet I think is due to spend 320 billion rand in the next couple of years, next 10 years in terms of infrastructure spend, or at least contribute to infrastructure investment from. You know, there's going to be demand for steel. The fundamentals should be there if you can turn this business around. Whether you'll ever get back to the 40-odd% plus margin, probably unlikely. But you know, can you build something in on the 10% plus? You know, that's got to be attractive to some investors.
And there's also a political element where government feels that why are we not selling the steel that's produced in this country to local companies at cheaper prices? So there's a lot of pressure on her from that front as well. And as Andre mentioned, you've got the foreign shareholder and government over here. It's a difficult juggling act to manage.
Interwoven there, the competition authority issues that seems to be a cloud over most of local industry players. If we talk about the comment that they've lost their way, how will they find their way? A recent step, I think they started announcing it during the course of last year, is looking to own their own iron ore. So they're looking in the Northern Cape for such a source of iron ore. Could this be a solution, Andre?
Well, that's a solution to the input cost side. That's something that they've got direct control over. If they can source their own supply at a cost price, then obviously that would be a big plus for them. But they, to a much bigger extent, left to the mercy of the world markets in terms of what they'll get on the pricing side. So for now, you know, it seems like managing the cost side seems like the better way to go.
And I think one of the other points that she alluded to in the interview was that she was having to face quite a lot of pressure. You know, you're fighting on a lot of fronts. It's not that you can actually focus on running your business. You do have the Competition Commission issue. You do have the government sitting in, and there's a lot of these fights that are going on. They've extended a period. It often wears down management in terms of where do you actually focus your attention. And I think it's actually very interesting if you looked at industry as a whole. You look at the construction sector going through very similar upheaval. Same thing. They've got the Competition Commission issues which are weighing on them. Take the eye off the ball. Are you managing your cash flows? Are you managing that underlying business to the extent that you can actually focus on what you're good at, or are you simply fighting fires the whole time?
Yes.
And I also think that Arsenal will start opening doors for themselves again and make life easier also for them again if they step the effort on the public relations front up a bit. You know, ArcelorMittal was always seen as this nasty, dirty, bullying business, and I think it has lost a lot of sympathy or sympathy that it might have had. Now, you know, it lost it along the way. So I think if the management and the company come forward, you know, and sort of like just as a way of we're operating in South Africa, this is where we are. We are listening to the needs of the country. They may find a few willing, you know, ears to listen to their story and listen to their plight.
Indeed, a little later in the show we are talking about reputation management, so perhaps the board of ArcelorMittal SA will listen to that. Thank you to Janse Van Vuuren, he's from miningmx.com.